back. Banks say there's been an increase in the number of homeowners who are struggling to service their home loans, and that the high interest rate environment is affecting home loan credit extension with fewer people applying. But FNB's residential property barometer indicates that the pace of interest rate tightening will slow eventually, and inflation appears to have reached its peak.
The high interest rate environment has dealt a heavy blow to consumers' finances and their disposable income. And economists expect a further 50 basis points hike in the interest rate at the Reserve Bank's next Monetary Policy Committee meeting. Experts have called on struggling homeowners to consider extending their mortgage repayments to improve affordability. Some banks are also offering repayment holidays to struggling homeowners who are battling to meet their monthly payments. Banks have faced legal action in the past for repossessing consumers' homes and selling them for close to nothing. But the banks say repossessing a house is done only as a last resort.
We are seeing a lot more customers showing signs of distress, whether that is flowing into higher repossessions. It remains yet to be seen. I think all banks are not in the business of repossessing houses. So we will try by all means to help the customer with a number of solutions.
The steeper than expected interest rate hikes and slower wage growth have negatively impacted housing affordability, and the home loan market is expected to slow further in the coming months. Homeowners are urged to notify their bank as soon as they start facing financial difficulties instead of avoiding their obligations.
It is important to meet with a financial advisor, go through a needs analysis, a financial personality assessment, look at your asset registry, look at how your assets are positioned, where your money is going, what your major expenses are, and try to reposition that with the most important factors at the top of your spending.
The property market is showing signs of weakening and sales are slowing due to the financial pressure on consumers. Consumers are urged not to overcommit themselves when buying property so that they can afford to service their home loans when the interest rate goes up. Naledi Matlapeng, SABC News, Johannesburg.
Muano Nemavhidi is a candidate attorney at the Socio-Economic Rights Institute and joins us now to talk about this. A very good evening to you, and thank you so much for speaking to us. 2022 has given rise to some of the biggest interest rate hikes we've seen in this country, but I'm just wondering, is it the biggest since the advent of democracy?
Good evening to the host and to the viewers at large. I think so far the best approach to take it from is to look at it historically. I think we've always had an inequality between the relationship of banks and credit users. And I think it's manifesting itself all the more now, post-COVID-19 pandemic, and even more as we try to adjust to a tough financial climate.
Now, just in terms of what homeowners ought to be doing, I think, as we mentioned, quite a lot of homeowners in a panic about being able to service their debt. But I believe there's a delicate balance between affordability, income, and interest rates, and quite often, small changes actually do make a huge difference.
Mm-hmm. That's quite right. I think it's very important for credit users to be proactive in their approach to debt, meaning even before you go ahead and sign the credit agreement, be it for a home or other movable assets that you're looking to purchase, look honestly at your finances and assess whether you will be able to honor your obligations. In our law, we do say that you are bound by the agreement that you have signed. So before you take that big step, just have a moment, look at your finances and assess whether, in light of the ever-changing nature of our economy, you'll be able to keep up with your repayments.
Selling your house, will this fix the problem?
Pardon?
Selling your house, will that fix the problem?
It may in certain instances. I think the best way to look at it is, even before you get to a point where you need to sell your house, you need to be proactive and not only communicate with your lender only in the event that they send you a notice of arrears. Once you find yourself in financial difficulty, begin to reassess your situation. Think about whether you can approach an agreement with your bank, they are obliged to listen to you if you do reach out to them first and indicate what level of financial distress you may be in and renegotiate a payment plan. Alternatively, if you are in a position to do so, if you notice you are in arrears but now have come into new financial means, you may pay your arrears as well as what you may term reasonable costs up to that moment if they have already sent you perhaps a Section 129 of the National Credit Act notice. So in those instances, it doesn't have to get yet to a point where you need to sell your house. At best, that should be a point of last resort.
And I understand that timing is important. If you are planning to sell your house, you've got to look at the market, that if there are similar priced homes on the market in your area, that it could be difficult for you to get a buyer.
It is, quite especially in our climate. It's not just a question of the value of your house at that particular moment, but it's also a question of whether there are actual buyers in the segment you're trying to sell in, particularly for those sections of the economy, labor force that are more strained in our economic times. For instance, I think you would have noted that there has been a reduction in the amount of people that are actually looking to purchase property. So in that sense, you might want to explore that option. Look at similarly priced homes and see whether selling would be a viable option for you.
And what about, I think obviously the idea would be you'd make some sort of a profit so that you can, you know, get over the financial difficulty. So profit would be something that people will be looking at. But factoring in what you've already paid, conveyancing fees, the transfer duties, renovations, repairs, levies, special levies. So how do you factor all of that in to reach a decision on whether or not it's a wise thing to do?
Well, I want to be honest and say that this decision will vary from person to person, depending on their particular circumstance and how far their financial situation has deteriorated. So you should be looking at it holistically from a perspective of, am I able to cut my losses before I'm unable to recover them? In our law, once you have defaulted and proceedings have begun against you for selling the house, you're in a much worse off position than someone who has interrogated their finances and found means to sell their house. Whether for a profit or a loss depends on the individual circumstances, but I would urge viewers in this particular predicament to be aware that the law does provide some sort of recourse for them to look at their individual finances, irrespective of the stage at which their financial situation may be. One example I might bring to mind is where you've already had proceedings brought against you and your house is just short of being sold. You can still bring up your credit agreement by paying the amount owing if you're able to. And even before it gets there, I just want to emphasize this point, that if you've been served with a notice or any sort of papers bringing against you some legal proceedings, don't sit by the wayside and wait until it has to get to the point of you selling the house. Rather engage proactively. Look at your options like negotiating with the bank, looking towards going to the credit ombudsman.
Muano, do we still have you on the line? Okay, unfortunately, the network seems to be working against us. Let's leave it there for now. Muano Nemavhidi is a candidate attorney at the Socio-Economic Rights Institute, just speaking to us about some of the difficulties that homeowners are finding themselves under. Of course, had wanted to speak to her about whether renting out your property is something viable, also speaking about the option of maybe downsizing. But as you heard her say, speak to your bank and see that you can fix the situation before it becomes worse. Right, let's leave it there for now.